Okay, today is August 3rd, 2014. Let's take a look at the market here. Last week we have a little bit of a spooky week, right? We haven't seen that kind of drop, a couple hundred point on the Dow and that sort of thing on a single day for quite a while. So everybody, kind of, I mean, not everybody, but those that got caught by surprise is really, kind of wondering what the heck is going on. So, but if we take a look at things on a constructive basis, and you can see that there's nothing more than, at least for now, as a minor pullback. Now, there are a lot of people thinking that this might be a beginning of a that 10 or 20% correction, and that may be, but so far right now, as the market is showing us, it's nothing more than a typical pullback until we see some major support being broken. Then we could also, then at that time, we could go and reassess to see is there more to a minor pullback than what it seemed. So let's take a look at the S&P 500. And last week I put up a chart here, and we were talking about this thing here. The basically this particular candle and this little bit of a candle price pattern. With a little doji. Candle, and then follow suit with a gap down, red candle. Kind of set up a little bit of an evening star type of pattern, and we say, that could be a sign that we might seeing a pullback, and so we sort of kind of get a little bit more defensive, and when this day came, that was the time that we should prepare to lock in a profit and then maybe tighten up or stop, so to prevent from small losses turning into big losses. Now, of course, there are a lot of people went and fish, and try to get in and initiate new long, and I think that's where a lot of the people that got trapped based on this particular move, and then all of a sudden we got this this drop here, and I think those are the people that's a little bit concerned because they kind of got trapped in there. But if we take a little bit closer look here, we talk about a couple critical support point level that we're looking at. So if I go back and take a look at the close, the closing chart here, just based on the close, because in reality, all these intraday noise, it really doesn't matter that much. It's the close that really matter when we talk about market or closing stock price and that sort of thing. Because the reason why is, those are how we look at net asset value, or what is a portfolio, net value is based on the close, not based on the intraday prices. So going back and let's just take a look at the trend here. I got a trend line drawing up here, and essentially you look at it, based on the October time frame back in 2011, and we pretty much still on this rising trend. If you look at the bigger picture, although we got, right now, if you look at here, we sort of skip this little dip down there, right, and just try to connect most of the point to kind of get an idea of the trend. And also you look at the 200-day and the 50-day moving average, it's still trending up. So there's nothing there to say, oh my God, this whole market is going to collapse, that sort of thing, right? So if we take a look at a closer look at some of these level, and we talked about, this 1930 level here somewhere, right? And it booked that, then we say, well, the next level will be somewhere around this 1925. Okay. Then we also look at it, the 1900, or they're close to that 1900, 1890 some odd change, and we talk about a lot of the confluence. If you look at the previous video on the S&P 500. We talk about the confluence based on Fibonacci retracement, support level, and that sort of thing. It seems to be converging to this 1900 level. If it get down there, we might get a little bit of a dead cat bounce, in the next couple of days, and we probably, we'll try to rally back up maybe to this 1950 level. So again, when it does that, we have to go back and reassess, is that, this pullback is completed, or it's just a little dead cat bounce and going to suck some more longs in there and then trap them and then flush them out again before it, go back up. Because here's that trend line. If we are talking about, coming down and hit the trend line. So again, if we extend it out, it could be somewhere around this 1900, or possibly down here is the 1885 level. Okay, so right now there is nothing really to get hysterical about, until something really collapsed. And right now there is nothing there to indicate there is something have fundamentally changed that gonna wash this market out. Now we are still in the process of making a top, so you still have to be a little bit more defensive, a little bit defensive. And right now, don't try to extend yourself with too many open position or too big of a position size. So be defensive and wait for the opportunity for it to set up and get your trigger and then go and nibble on some of these potential long. But right now, the best position to be probably would be in cash, because until the market give us an indication of where it might go, it's best to just stand aside and wait, because if this market reverses itself and go back up, there's going to be ample opportunity for us to go and try to catch some of the long. But if you try to jump the gun and then it decide to take it down to a little bit more than a pullback, then you get trapped in there. All right, so just be patient. And then we also take a look at the Dow Jones. Just take a look at the other indexes and just get an overview of where the market is. So again, let me kind of get this thing zoom in here, and you can see that even though right now you see the overall trend is still up, right? We might see a little bit of a pullback, maybe come down to this somewhere around the 16,300. Try to get close to this 200-day moving average here, right? Okay, so essentially if we get a little trend line, support line here, so maybe possibly get down here. But again, the Dow Jones, we have I believe 4 consecutive down day, right? So we probably get a little bit of a bounce here, right? So if we get a little bit bounce and maybe we get back up to this level here, somewhere around 16,700, so a couple hundred point bounce, and that wouldn't be too surprising. But again, we're basically looking at this thing. We saw this something like this down here, and there's nothing really more than a few percent of a correction. It's nothing that that dramatic 10-20% correction. Wait until the market tells us that's what it's gonna do. Right? I mean, even over here, kind of spooked a lot of people get dipped below these 200-day moving average market watcher, right? So we might do that and fake some of these naysayer in there to try to short the market and then trap them again. But again, it doesn't appear that the end is here. Okay, now I'm not saying that it won't be, but at least right now, it hasn't seems to indicate the top have been made yet on this market. And will we see a newer high? Yeah, I think we will. Maybe not on a broader market basis, but at least on maybe 1 or 2 market indexes. And one that I'm kind of looking at is basically the Dow. Okay, then let's take a look at the Nasdaq. Okay, with the Nasdaq 100, I know the technology been kind of hit pretty hard recently. Okay, so again, if we go back and take a look at the bigger picture here, right? Again, it's pretty much still on this uptrend here, right? Even though that we got a little bit of a correct, pullback here, coming down, and possibly maybe tag this 50-day moving average and get down to the 38.43 or something, some level down there. So, so we might get down to tag this moving average, right? I mean, worst case is maybe come back and tag these level here, dip under 3,800 and dip below the 50-day, and then kind of trap some of the some of the anxious short there. But again, it's really there's nothing that big of a deal to worry about, other than just be a little bit cautious, okay? And especially on the Russell 2000, I think everybody is kind of all spooked up on the Russell, right? Because they are talking about this, impending, double top, head and shoulder, and that sort of thing. So let's go and take a look at, again, looking at the little bit bigger pictures. Although, yeah, it kind of dipped down below the 200 days. So it's here too, right? And then we came back and, actually got close, 50 cents close, near a new closing high. And if you look at the IWM actually made a new closing all-time high, right? So again, we basically have to wait until can it break this? So is it going to break this this particular level here, somewhere around this 1094, 1095? And if I zoom this in, right, so we're going to break this particular level. Then when it break that level, then we're going to take a look at to see what kind of damage has it done. Is it just a little bit of a fake out, or really a break of this major support and a start of a new downtrend here for the Russell 2000. We don't know that right now, right? Because right now we're basically still looking at these possible support level here. Okay, and I wouldn't be surprised we're going to get a dead cat bounce on this, next week on the Russell 2000. Because if you look at here, also I got the sort of Fibonacci retracement that I kind of put in, basically using this particular swing, and you see that it comes back up to the 618, and then we booked this basically like the H pattern and came down and attacked the 127. Right, so we might get a bounce off of this 127. You can see this little candle is kind of right here, kind of bounces back up when we have that. And if we look at the the intraday, you can see that there is some positive volume or positive move near the close last Friday, but we can't put too much credence on that because it's OPEX. So we just have to wait and see. But again, watch these technical level and be cautious. Don't try to go and pick the the bottom of this pullback or jump the gun and get sucked in on some of these short, because right now this market could snap either way. Right, so we really can't tell which way you're going to go until we make that move, and then we go, then we could look at the price action and we assess to see, is this a fake out or is this a breakout? So hopefully this will help. Good luck.